Hello folks, welcome to your next step in the exhilarating world of options trading, where we're going to make things as simple as sipping sweet tea on a summer day. Today we're unlocking the mystery of a strategy known as the married put. It might sound complex, but stick with me and you'll see it's a game changer, especially for beginners. So let's demystify this strategy and get you on the path to trading with confidence. First off, options trading. It's like being given the keys to a potentially lucrative kingdom, but with great power comes great responsibility. Options are contracts that offer the right, but not the obligation to buy or sell a stock at a specific price on or before a certain date. Now, while options can turbocharge your portfolio, they can also be a quick way to lose money if you're not careful. That's where strategies like the married put come into play, providing a safety net as you learn the ropes. What is a married put? Picture this, you've just bought shares of your favorite stock, dreaming of the profits you might make, but the stock market can be unpredictable, like weather in the mountains. A married put is your insurance policy, ensuring that even if the stock price falls off a cliff, you won't lose your shirt. You purchase a put option for the same stock, which allows you to sell your shares at a predetermined price, no matter how far the actual price may fall. It's like having an extra parachute when you're skydiving. You hope you won't need it, but you're glad it's there just in case. And for those diving deeper into investing, I give real-time trade alerts in my Patreon, and if you would like to try my TradingView custom indicators, there's a free trial link in the description below. With that out of the way, let's go over an example. Let's roll up our sleeves and look at a practical example. Suppose you buy 100 shares of a company called Future Tech at $50 each. To protect your investment, you also buy a put option with a strike price of $45, paying a premium of $2 per share. Now, if Future Tech stock takes a nosedive to $40, your put option allows you to sell at $45, significantly reducing your loss. This strategy is about minimizing risks and keeping your investment journey on a steady course. The million-dollar question, when do you play this card? A married put is ideal when you're bullish on a stock but nervous about short-term risks, perhaps due to market volatility or an upcoming announcement like earnings. It's particularly appealing for stocks you believe in long-term but are riding through a rocky patch. This strategy ensures you're part of the stock's upside while being shielded from the worst of its downturns. Every insurance policy comes with a premium, and married puts are no different. The cost of the put option eats into your potential profits, making it crucial to assess whether the protection it offers is worth the price. It's about finding that sweet spot where the cost of the put aligns with the level of risk you're willing to accept. Remember, investing is as much about managing risks as it is about seeking returns. Is a married put right for you? Incorporating married puts into your investment strategy signals a thoughtful approach to risk management. It's suited for investors who are venturing into options trading with an eye on long-term growth, providing a safeguard against the market's ups and downs. As you become more comfortable and experienced, you'll learn when to employ this strategy to its best advantage, balancing protection with potential. Congratulations, you've just taken a significant step towards mastering options trading by understanding the married put strategy. But the learning doesn't stop here. Next up, we'll explore other strategies like credit and debit spreads, further expanding your trading toolkit. Remember, the goal isn't just to invest, but to invest wisely, using strategies that align with your financial goals and risk tolerance. We've walked through the concept of the married put, a foundational strategy in options trading that combines the potential for profit with a measure of protection. As you continue on your investment journey, keep this strategy in your back pocket, ready to deploy when the situation calls for it. Keep it real, and I'll see you in the next video.